Development is about stepping up for the SDGs, the 800 million people who go to bed hungry every night, the billion people who don't have access to energy or to an all-weather road, the 2 billion people who don't have access to clean water, the 4 billion people who don't have access to sanitation, and that's your basic development agenda. But then comes the sustainable part. You've heard a lot about climate, but there's another way to look at it, which is just your basic math. The needs keep growing. We're going to have, by 2030, we have another billion people on the planet, another billion people living in cities, another 2 billion people living in the middle class, which means we're going to need 20% more energy, 20% more food, 20% more water. And this puts a huge pressure on our infrastructure, on our natural resources, and of course, in the context of a changing climate, we have a lot more pressure on all those things. Now, as we work to meet those needs, and that is the original cause of the World Bank reducing poverty, to meet those needs, we have to be sure that the rate at which we use resources to generate income, to build those assets, doesn't exceed their rate of replenishment or their carrying capacity. So when we put together programs to increase food production, we're not depleting the water, the forest, the land. When we increase electricity, energy access, we're not increasing carbon emissions. When we build more city housing, we're not doing it in a floodplain. And even when we do things in the name of climate, we have to take sustainability into account. So when we push for electric vehicles, we have to be sure we're not pulling from fossil fuel generated electricity. Or when we put in place solar pumps, we're not over abstracting from the aquifers. Or when we're not using fossil fuels to mine copper to build our wind turbines, right? So that's the sustainable development challenge. You've heard a lot about climate, so I'm not going to go into climate now. I just really want to focus on the origin, the green, the natural resource bit, which we know our natural resources of the planet need to be preserved and managed if they're going to keep supporting us over the long term. I think it was Christopher who said, we're promoting too much short-term consumption. And if we use them up faster than they're being replenished, then it's like killing the goose that laid the golden egg, or the foundation for our development gains is gone. So I'm just going to give you a couple examples. By 2030, in just 12 years, we need to increase food production by 20%. But currently, 30% of land, all land, and 70% of agricultural land is already degraded. In those same 12 years, total demand for water is going to outstrip supply by 40%. Already 500 million people live in areas where water consumption exceeds locally replenished supply by a factor of 2. Already 1/4 of the largest 500 cities is under water stress. Deforestation, Patrick mentioned, already contributes 15% to carbon emissions, and 13 to 20 million hectares every year are being lost. More than 1/3 of the world's fisheries are already depleted, and at the rate we're going, they could all be gone by 2050. Air is a natural asset that we don't even think about, but globally, air pollution is the 4th leading cause of death and costs us 4.4% of global GDP. And then, of course, we've all talked about the IPCC reports. I won't go on, but we know the impact of even getting to 1.5 degrees makes that situation worse, let alone if we got to 2 degrees. So as a global community, we're not doing so good at investing where we need to invest or investing in the right way. So let me talk for a minute about the financing challenge. How do we finance all those needs? The cost is in the trillions. You've heard some of the numbers. I was going to say 75 trillion for infrastructure. Somebody said 90. It doesn't really matter. It's a really big number. Most of it depends on how you count, whether we can work on the demand side. We have a whole study on it if you're interested. Most of that's in low and middle income countries, and all of it, according to the IPCC report, 100% of it needs to be low carbon and resilient. Now, the World Bank does billions of dollars of lending on its own balance sheet for what we call sustainable development, about $25 billion a year from I to IBRD, about 3.5 billion, probably IFC doesn't count it the same way, but something like that from IFC. And we also have specific commitments on getting climate co-benefits. Last year, 70% of our projects had some climate co-benefit. The total was about $20.5 billion from the whole World Bank group. But all the financing from the World Bank, from all the MDBs, donors, never going to be enough to meet that 75, 90, whatever number you want to pick. So we need private investors. You know that. Oh, I was also going to say the World Bank does screen 100% of its projects now. We've made that commitment, and that's what we're doing. But to get the private sector in, and I think you guys know the numbers better than I do. Tommy said the untapped market is huge. We know there's something like $6 billion in negative interest rate bonds, 10 trillion in low government securities, and 9 trillion sitting in cash. So the question is, how do we grab a hold of it? The flow of private investment into sustainable development is actually still a trickle. So we know what investors worry about: risk, business environment, tariffs for infrastructure don't cover, the cost of the service provision. A lot of ecosystem services aren't valued. They don't generate revenues. So that story is very familiar. So what do? How do we get more money into infrastructure and natural capital? So everybody's talked about infrastructure, and since my time is limited, I just want to think a little bit about natural capital and how we can mobilize the global community a little bit better. So we know that one of the ways is to, and one of the comparative advantages the World Bank has, is to move upstream and really get some policy and regulatory changes. To give you a quick example, in Vietnam, we worked with the government. They passed a regulation. So the shrimp farms had sort of gotten rid of most of them, or they were really wiping out the mangroves. So we worked with the government to put in place a regulation that said shrimp farmers couldn't get an organic certification if they didn't have 50% of their farm covered by mangroves. So that was just a policy that they put in place. And then Ming Fu, one of the largest Chinese seafood traders, came in and started paying extra because they could get the premium because of the organic certification. So farmers got increased income and had enough money to pay for them to do the mangrove planting. So that's a happy story. So working up front on a lot of policy and regulatory can actually make a difference. But there's lots of different ways that creative people have been thinking about to channel money. So we have payment for environmental services. We have supply chain alliances. We have carbon funds. Many of you are familiar with the Forest Carbon Partnership Facility, the Biocarbon Fund. We have revenues. Some places have put in place carbon prices, which can be used to invest in this. We can redeploy subsidies that we have for fisheries or for agriculture, for fossil fuels. Right now, they lead to more natural resource depletion. They could be channeled to actually make investment, have positive impact. And then, of course, there are the bonds. And the bonds come in all different flavors, colors, themes. We've got green, we've got blue, we've got forest, we've got cat, we've got climate, we've got SDG. We've got all these different things. Bonds are just one of the ways we can do this, but they're really important. And since that's what we're here for today, that's what I'll talk about. So at the end of FY18, we had something like 91 green bond eligible projects that were supported by the proceeds from the World Bank Green Bond. And 10% of them, like 8.5 billion, went specifically to work with the World Bank on projects that we were doing, focused on agriculture, forestry, ecosystems in 28 countries, using on average about 60% bond resources and 40% of the bank's own resources, where we have results framework and we can monitor the impacts. So I think those of you who picked this up on your way in, you can flip through dozens of pages and you can see the kinds of things. I know you're all very familiar with it, but from Tunisia to China, we invest in trees and preventing soil erosion, and we can measure the impact on degradation and carbon emissions and so forth. So we've been able to work together on that. I think most of you are familiar with that. So I just wanted to mention a couple of things. In Fiji, where we did, with the support of the bank, we got the first emerging market sovereign green bond. After Hurricane Winston, the World Bank had come in, and we helped the government do what was called a vulnerability assessment. And they came up with 125 different measures that they could take to help build their resilience, and we helped them prioritize it. And then the World Bank came in with a policy-based loan where they could change policies and regulations and so forth. and we financed that in budget support. And then with the green bond revenues, we were able to combine efforts and actually finance a number of the top priorities that had been identified. We haven't mentioned today the IFC forest bond, but again, this is an interesting twist where we gave investors the choice of getting coupon payments in carbon credits or cash or a combination. And then IFC went in and bought carbon credits from a Kenya project that protects hundreds of thousands of hectares of dryland forest and provides income to communities and landowners that actually engage in sustainable practices and then offset 1.4 million tons of carbon emissions over the period of the bond. So that was another approach. And then we had the blue bond, which I wanted to mention because we just launched it a few weeks ago. And for me, it was particularly exciting, even though the amounts were small, because here we were mobilizing capital and getting investors to come into an area where we often don't get private financing. So what it does is it helps give the government of Seychelles money to promote sustainable practices in and around the ocean, things like fisheries management, stock rebuilding, aquaculture, vessel retrofitting, and so on. And it actually, then it helped the government really drive the commitment to do these things because they could get the money. And what I think is exciting about this is that as we create these different themes, we tap into interests that might not come into this market. So people who might not be interested particularly in climate because they're obsessed with, say, marine plastics. They want to deal with plastics, which is, of course, related to climate, but it's not the same thing. They may be interested in a blue bond. Or people who are interested in just the forests and landscape management maybe it really may grab their attention and be compelling for them if you issue a forest bond. So when you say green, which historically has sort of meant sort of environment, natural landscape things, most of what we were talking about today was climate, and a lot of these bonds go into things like solar panels or things that aren't, I mean, it depends on how you define green. So you have to figure out what really pushes the buttons for these investors. And as we launch these different things, and we do have projects in all these areas, we can bring a lot more money. I think Arunma mentioned going forward now with other water-themed bonds. We talked about SDG 6 on clean water and sanitation. We talked about SDG 14 with life underwater, which is really this oceans agenda. Many other SDGs have this potential. We've been talking with the French about potentially, I haven't told you yet, biodiversity, which is a big theme coming up, and for the French as they take leadership on the G7. So let me just conclude then, which is the main message. So millions, billions of people still lack the basics, and we need to be relentlessly boring. This is the development agenda, but sustainability has to be woven into every single investment. The panel was talking earlier about roads that aren't resilient and low carbon, et cetera. Every single thing. We cannot put our heads in the sand and think that we can improve livelihoods over the medium term if we deplete the resources that we need for those livelihoods. So we need instruments. We need all these instruments. We need to work in partnership with our Treasury. I have a huge shout out to the people in our World Bank Treasury who are amazing, but really to all of you, yes, thank you. They've been awesome. And their partnership with us has helped us be a lot more creative and helped us tap into the investors. And I think they've learned a lot about how our projects work and the kind of benefits we can get, especially as we work in synergies. But a huge shout out to you. You know, we're working into this market. You've come in, we can push you. We've brought in brand new investors in the blue bond who weren't in this before, and this wide open and welcome to all of you who want to come in and help us think about, because I'm supposed to be thinking about the future. I really think this is a tool we can use. And somebody said, move it from no brown to positive, whether it's green, blue, whatever color you want to say. This is existential. We do need to change every investment we make to be this way. I think for me, I wanted to end in a quote also, which is by Robert Swan, who's the explorer and climate activist, and he said, "The greatest threat to our planet is the belief that someone else will save it." No, it's you guys in this room, and it's everyone we need to welcome into this house. It's all of us working together and to get everybody to invest in things like sustainable bonds, whatever color they may be. Thank you.